very, very interesting out there. And from my standpoint, some of what I want to talk about today literally gets into some of what Ben Bernanke has been saying, certainly what we expect out of Janet Yellen, and what is the destiny of our economy. Now, I got to tell you, I was as surprised as anybody by Ben Bernanke making a decision to start tapering. I think the impetus originally is a bad move in lieu of the fact that right after the Christmas season, maybe by mid-January, if it's the end of January, we're going to see the effects of the holiday season diminishing, layoffs skyrocketing because it's the seasonal income. Those people are going to go away. It's a different time, but the fact that the government is not going to spend $10 billion and keep printing their own paper to keep the economy boosted obviously affected the market. Stock market jumps up by over 200 points. Do you understand that the 200 points does not reflect the same gain seen in Japan? That 2% was 300 points. That's not the same effect here in the US. But that having been said, the $4 trillion balance sheet of, quote, asset value are our own mortgage-backed securities and treasuries. There's no real value there. Full faith and credit doesn't mean a positive. It means that we're artificially propping our market. And all the government has said is we're not going to keep buying our own assets. What happens if the government decides to start selling it all? They want to raise cash. That's why we sold off GM. The old General Motors, the way we knew it, was to stimulate some cash flow into the Treasury. However, at a loss of $10 billion. So I understand both sides of the argument here. The bottom line is that there's still trouble and the waters are murky at best. Now, looking for unemployment to adjust down to 6.5%, which is where Bernanke put the numbers back in August, September, means that we still have a way to go. But things look better. We're all going to be optimistic. How many of you, the average guy on the street, whether it's driving a truck or throwing cement or sand or you're trying to make ends meet, is going to see a major benefit out of the fact that stocks went up today or that gold went down? Remember, the bottom, the technical bottom in gold is probably in the $1,000 to $980 range. That bottom, if we could get there, is going to make people that have been invested in mining shares lose more money. The miners themselves are probably going to go out of business or start massive layoffs. And the other side of this is that if you watch JP Morgan Chase or you watch the other co-custodians of GLD or SLV, the warehouses are nearly empty and foreign central banks are buying gold as fast as they can get their hands on it. Now, yesterday I talked about the $6,999 1881 San Francisco Morgan silver dollar in mint state 65. The coin came out of the Newman collection. It had pedigree all the way back to Colonel Green. He was the gentleman who owned the 1913 Liberty nickels. That coin, from the morning show to the afternoon, was removed from an online auction house, which meant the coin was sold. I continue to have the debate with customers. I'll have it until I'm blue in the face, and it doesn't bother me. The confusing point is that you can shop online or you can make phone calls all you want. There are attractive coins that command huge premiums. An 1881 San Francisco Morgan silver dollar in mint state 65 condition, graded by either of the major grading companies, NGC or PCGS, is going to trade from a bottom of about $150 to about $175 on the low end and upwards of $7,000 on the high end. So you get quoted a coin and you make some phone calls and you go visit somebody and you're told that the coin's a $300 coin. Well, if it really sells for $150, Maybe you're paying too much. Maybe you're not paying enough. Coins command premiums, and you cannot generically utilize the grade of a coin and determine that that grade is going to matter across the board. There are proof-like silver dollars. There are deep mirror proof-like silver dollars. There are coins that get designated with a plus sign. There are coins that get designated with a star. Then you've got CAC, and the green CAC sticker will command a premium between 5 and 10% on the low side to as much as 50 to 80% on the high side. And if you can get the gold CAC sticker, now you're talking about coins being worth 100 to 200% more money. It is a way of identifying value, and it reflects in the charts that NGC and PCGS maintain. But the bottom line is that a premium quality coin, we call them PQ, a premium quality coin literally will lead you into understanding that there is eye appeal. There is the sexiness of toning. If it's half moon toning, if it's major colors that you see in the toning. Now, I'm not talking about the dark, ugly looking toning. I'm talking about attractive blues and reds, purples, yellows. There are sulfur effects when coins are dropped in bags that bleed through to the coins. You don't want to clean them. You don't want to dip them in a solution. If you don't know what you're doing, you can literally affect the value of coins by hundreds and thousands of dollars. So some toning is very attractive. There is some toning that's really ugly. And so my point to you is that if you've got some attractive coins and you take them out of the holder and you try to upgrade their value, you could negatively impact the value of a coin by tens of thousands of dollars. All of it in an attempt to either, quote, upgrade a coin or hide your theft, because coins have ID numbers, and those ID numbers really do matter. Now, when I talk about currency or coins, or when I'm talking about identifiable jewelry or other types of collectibles and artifacts, there's a number of different ways to procure and move through the marketplace. My biggest point in bringing any of this up is that when it comes right down to it, I want my clients to understand the marketplace. And as I said yesterday, I've got a conversation that took place Thursday a week ago. And a gentleman, I sold a 2008 West Point burnished Silver Eagle with the reverse of 79. I hunted the coin down yesterday. You can buy one in its original box and papers from the government and buy it for a little over $650. I sold one to a client for $450. And if you got it authenticated and graded in a mint state 70, you're talking about a coin that sells for between $950 and $1,000. But somebody told this guy the coin's worth $26. So either the person lied to me when he conveyed the story, or the dealer didn't understand what he was looking at, and he lied. Now, I'm going to tell you point blank, I didn't pay that much for it, so I made my money when I sold it, which is why I sold it at the gray sheet bid. That's the Coin Dealer newsletter. It comes out weekly, quarterly, monthly. Ultimately, it is one of the guides to the industry, but coins trade more active than that. You look at the gold market, and you're going to tell me this is what gold is doing. It's down $11.50, somewhere around $1,219. And you look at the price of silver at $19.75. The metals markets are down less than 1%. So if you're trading in physical metal today, you see 270 points. That's what I'm looking at on a 10-minute delay for the Dow Jones Industrial Average, up 270. Okay? Until it hits over 320, it's not made the 2% gain that we saw in the Nikkei. I'm looking at the price of oil. It's right in line with what I see the metals giving up today. It's up 0.5%. The metals are down between 0.14 and 0.93%. So this is not the area of a major aberration. You don't need to be worried about selling all your stocks or your homes or the other assets that you've got. But what you should be concerned about is that while the U.S. government, the Treasury, the Federal Reserve admits that they're going to begin tapering, what they don't do is they don't tell you anything other than the fact that we're still buying our short and long-term debt because nobody's interested in investing in the U.S. government. All of the traders that are out, whether they're trading in the NASDAQ or the S&P, whether they're in the Dow or any of the other indexes or indices that are out there, the bottom line to what really is happening is that people are concerned about the economy. And I understand it's the week before Christmas, and if you drive by, you're going to see a lot of activity, quote, in the malls. You're going to see a lot of people shopping. But you know the figure you don't get to hear, and this is something that I've talked about time and time again, you don't see a whole lot of cash being thrown across the counter. You don't see it at any of the largest retailers, and maybe you do. I'm talking about what I've experienced and what I see people do. Now, I can tell you I know of a group of people that are spending a lot of cash, and that's all they're spending because they don't want to see their transactions, quote, laid out there. Ultimately, this is that time where I want to be able to talk to people, and I want to be able to explain why things happen the way they do. Things happen the way they do for a lot of different reasons. But when I look at the fact, Michael and I were talking this morning right after I got off air, Bitcoin took a hit. Have you looked that one up since early this morning, Michael? Okay, give me a quick, we'll talk about it. We went from 1,200 in Bitcoin down to somewhere under 6. So all of a sudden, Bitcoin's trading dropped dramatically. I'm worried about it. I'm worried about it for the people who recently got into Bitcoin who saw a 50% drop in the market. What I'm really concerned about is when do you decide to get in? When do you decide to get out? When do you decide to invest in JP Morgan? When do you decide that that's not the right move? When do you decide that the class of material that I talk about, whether it's a third, and a third, or any facsimile thereof, this is the reason why I talk to people about owning things that other people want. Why is it so hard to save money? Because things change. Grocery prices change. Kids have clothes. And Michael and I are talking about the amount of toiletries that that women need. It's a need. It's not a want. I certainly understand that. But it changes the outlook of how we earn our livings and how we are able to save or not save. And so when I look at things, I'm looking from a standpoint of the broad stroke of the market, realizing that there's a lot of things that are out there changing. And the bottom line is that as things change, we have to make changes. And I want rare coins because what, quote, was rare 10, 20, 30, 50 years ago will be more rare down the road because more people are, quote, seeking it. Now, I can tell you, Michael, thank you for the information. Bitcoin around 575 was over 1,200 yesterday. And from those who originally acquired it, you're making a lot of money. But if you bought it in the last, say, 2 weeks, you're looking at a hit. It corrected for 50 percentage points. Are you ready to jump in now? Because that's where the concern lies. How do you diversify from this standpoint? If you just want the most common stuff known to mankind, you can do a lot of research, and if you've got the time, that's okay. But the reality is there's a lot of different ways to own a lot of different shares in different marketplaces. JP Morgan, as I said yesterday, has about 20% of the long positions in gold and silver. That's a major, major impetus. They're not in the business of losing money, and so the correction that you saw today in gold or silver isn't bothering them. Sure, on paper it looks like a loss, but they didn't sell it. They haven't taken any loss. And it's that standpoint that I want to talk about rare coins about. I want to own precious metals because this economy isn't just having problems here in the US, it's having problems overseas. And it's from that standpoint that I worry about the marketplace. I worry because other people have concerns, and those concerns literally generate the future interest of all markets. And from all markets, when we look at what's going on, I want my clients to understand why we look at certain things and why we don't. And it's from that standpoint that when you understand how fragile the coin market can be, when you realize that there are 50,000 Type 2 $20 gold pieces from AU50 to the finest known, and there are over 1.5 million St. Gaudens gold pieces, and you can buy a coin that's one of 50,000 for about the same price as one of 1 million or two, all of a sudden you start to see the rarity factor. You understand how rare coins can be. When you talk about owning a coin that's 1,000 times rarer, but you're only paying a 40 or a 50% premium for it, that's rarity. That's the real value. So you tell me, Brett, I don't understand rare coins and I don't want to get into rare coins, and I can tell you point blank, there are coins that will sell for hundreds of thousands of dollars. There's plenty of money chasing them, and you're going to tell me that you're afraid to spend $1,250 or $1,300 on an ounce of gold. I'm telling you that there are people out there paying $20,000 to $100,000 to more for an ounce of gold. They're just doing it in rarity because they're not worried about a get-rich-quick scheme. They're looking out further into the future. There are some people that can only look a year or two ahead, and that's long-term thinking. There are those of us that look 10, 20, 30 years into the future. I never figured I'd be 60 years old, but that day is coming. And back when I was in my 20s, the thought of living another 35 or 40 years, holy mackerel, my parents weren't that old. So reality is things change and our perceptions change. That's where I want to get you to. I want to get you to a place where you don't sit back and you say, hey, look, this guy charged me an extra $500 or an extra $2,000 for a coin because I can build the case around a coin that sells for $200, and here's the same coin, the same grade, the same grading company, and the coin sells for $7,000. It doesn't mean the one for 200 was a better deal than the one for $7,000. And 30, 40, 50 years from now, trust me, the rarer coin with the pedigree for $7,000 is going to look that much smarter down the road. Just like a 1796 quarter in Mint State 67 that a guy paid $100 for commands $1.5 million. He never anticipated that kind of money. It wasn't even fathomable. People didn't even think about numbers like that. But lo and behold, there's the reality of how markets trade. Anyway, been around doing this for almost 30 years, and there's a lot of information up there. If you want generic positions, if you want the cheapest stuff, and you don't want me to put my head on a chopping block, I'm more than happy to make the representation. But when you tell me a ugly, frosted, banged up 1871 $20 gold piece sells for $5,300, or you pay $6,000 for one that is absolutely brilliant, the luster is dripping off the coin, whether it should have a plus, a star, or the CAC sticker, the coin will bring more at auction, and more people want the pretty coin than the ugly coin. That's simple. Anyway, I don't want to get off air without talking about Texas Children's Hospital, both the Downs Clinic and the Ronald McDonald House. Now, I love Texas Children's. I'm going to come up with some other hospitals that need help financially. But folks, right now, Texas Children's is near and dear to my heart. The Downs Clinic and the Ronald McDonald House. The Ronald McDonald House houses 20 rooms on the 4th floor, 40 to 60 people every night that stay overnight. to be able to be bedside with their kids. They could use a hot meal. If you can provide the hot meal, please call 832-824-8600. That's 832-824-8600. Or go to themeltdown.com, click on the donation link for the Downs Clinic. That's the Myers Center, just south of Texas Children's at their Fannin location. Or the Ronald McDonald House. Provide them a tithe or a donation or an offering. The information is anonymous for me, but you'll get the receipt for making your donation. And I love the kids. I love the hospital. I love everything that everybody does out there. And I truly appreciate the doctors, the nurses, the staff, and the volunteers. Now, folks, I'll be back tomorrow sometime before 9:30. If you get a chance, please feel free to give me a call. You can reach me toll-free at 877-705-2646. That's 877-705-2646. Or you can call the local line 281-548-COIN. That's 281-548-2646. Hit option 0, get a live voice. I'll be more than happy to take the call if I'm not tied up, but as we get closer to the end of the year, you want to take positions. The last thing, if you've got capital gains and you own precious metals or rare coins, you can liquidate them depending on what you've got overnight, a 1-day trade in bullion, a 31-day trade in rarer coins. Take the loss, offset your gain, zero your tax liability. If you need more information about that, give me a call or email me, Brett, B-R-E-T-T, at thegoldexchange.net. Appreciate you listening in. Have a great afternoon. God bless you. We'll see you tomorrow. Bye-bye.